Hello, this is Solomon Davis from Right Side Trading, where you can learn to trade on the right side with confidence. This is a quick trade review. After my weekly review, I said, look like should be a day to go long as soon as if you can buy that dip. And I'm going to just show you exactly how I traded it. Not exactly how I traded, but part of the way I've traded it. The live trade that I actually did, and to show you what happened, kind of like what happened. I am out of that. I am out of the trade. I'll just let you know that. I am not. This is not a trade recommendation. Just like I had said this morning on that video. I am the type. I make X number of dollars on a trade. I'm done for the day. And then I'd rather just give it a try the next day instead of trying to carry it all week. Like I said, I have carried some trades longer, but it's usually only one contract, two contracts, four contracts at most I've ever carried like that. So it's not my norm to carry trades for multiple days, but when I do, they're very, very small positions. So let's go ahead and I just want to let you know that right up front. This is all for educational purposes only. This is not a trade recommendation. This is just showing you how we look at the market, how I look at the market. I'll be posting this out here on my YouTube page. Now let's just go ahead and jump over to the charts. Okay, here's the chart. And well, the other thing, here's the chart. This is the fifth live theta, what's happening actually right now in the market. This is what I saw this morning. Just my custom little indicator that I like using. It on QQQ. It will always start here. It starts at the open. That's what this black line, this green line here is my H1 line. This is my L1 line. This right here is my previous day high line. This right here is probably just no, that's my H2 line. On a strong day, I expect the market to go all the way up to this point right here before I get out of my trade. So that's what I use. That's what I expect. Now my entry. My entry is usually I see it going like this, green up. I don't get in. I never get in right away. I like to see it, especially this was a greater than 10. Let me just show you that right quick. Go here to the NASDAQ. If you see here, 81, 91, greater than 10. So you got to wait. And what I've learned, instead of taking that trade right away, wait till it come back down to one of my indicators or using a different indicator. See what's happening on your indicators. Don't jump into this trade right away. Because when it's big like that, sometimes it runs on you, but it was already here at what I call an H1, a resistance level on this particular indicator, especially the first time it comes up to. I've seen this just too many times. And also I waited. It came down to here, and boom, I was in this trade. I was in this trade here, and a little early, yes, a little early. But I thought it was close enough that it came down close enough to my indicator, and I was able to take it long. But this thing ended up coming back down here to me again, and then it actually started. It took off for me. Now let me just show you that I'm not just telling you stuff. I'll show you my actual account here, part of it at least, and all. Right here, 10 contracts filled at 4:57. The time 9:52. Like I said, it was after that 9:50 candle. It wasn't quite the bottom, but it was close enough for me at the time. And knowing, how the market could go down there a little bit lower. Wasn't expecting that. But if it did, I was looking for a reversal, and it did reverse. So everything did end up working out okay. Now the options, where they are at right now. That's the other thing I like for you to see. This is the strike I was buying, that 165 strike, and all. You saw I had got it at 457, so it's up over $1 right now. Just use these we can use these calculations right now. It's been up much higher than this. It was over $6 earlier, So it is pulling back just a little bit. It's just, that's just the way the market is. Don't get too excited about this. But me, I'm out. I'm over $1 on my trade. I'm out. I'm over $1.50 on my trade almost. I'm out. $1.40. I'm out. So again, what we hear me talking about dollar this, dollar that, 10 cents this. Let me give you an example. Let me just kind of show you what does that dollar mean. Let me switch back over here. Let me do this. Let me bring up a calculator. I know a lot of times when you talk these numbers, they don't mean anything to most people. They don't know what you're talking about. I understand that. Let me bring this calculator over here. Yes, you should be able to see it. So I got into this trade for $4.57 times 10 contracts times 100, because each contract contains 100 shares. So it costs me $4,570 plus commissions to enter its trade. So now, okay, so you got that number. Now the other thing is, how much did I actually make? So it moved a dollar. Let's say it went to a dollar. Say I got out at $1.85. Say I got out at $1.87. So I got out $1.87 higher. Say I got out at 5.80. Where is that? Is that 5.87 right now? Say I got out at 5.87, below where it's even trading at right now. But I got out earlier and all. So I end up making $1.30 on the trade. So I have to go $4.57 plus $1.30 plus 130 equals. So I made $5.80. That's where my 587 was coming from. I made $5.87. $587. I mean $5.87 on the trade. I made the trade. I closed it for 587. So now, what does that mean? You have to time that times 10. Notice equals times 100 equals. So when I closed the trade, I ended up closing that trade, and they inserted into my account, $5,870. So now earlier, it cost me, $45.70. So I have to subtract minus 4,570 from that equals. That shows you exactly. That shows you what I made on that trade minus commissions. 10 contracts, 10 contracts, 10 contracts, options. 4,500. It probably costs you more than that to do one contract in the future market, unless you got a discount broker where you can do contracts for $400 or $500. But for me, I don't like going through all that, all the ins and outs, trying to get in and out of your trades. Things slipping and bouncing all over. With the options, for me, it's just a lot easier. I'm used to looking at the option prices. So, and then once I get over a certain dollar amount, I'm looking to close that trade. So that's just how I am. So, and that's what I really want to show you. I want to actually show you the math, so $1,300 in a day. And okay, so let's say $13 for the day. I'm gonna just divide this by 40, a 40-hour week. So that's $32.50 an hour for the whole week, and I made it in less than a day. So that's why this is not every day, but it's easily every week here recently, the way this market has been going. So that's why, again, I'm looking for a job, but I can be choosy. And that's why I can be choosy, because I'm doing okay right now. As long as I'm doing okay, I'm going to continue to be choosy. That's all I really want to share with you guys, a little bit more information that you really care to know. But this is what's happening in these markets today. This is where we can help you. And again, like I have mentioned in my earlier thing, is my friend, I told him, yeah, you may be doing okay right now, but you need to make sure you can make more than enough throughout the whole year, to cover your income, plus have you some savings. Kind of give you a look at the chart again. This was the ideal place. This is one of my patterns, but this is where I got in. I saw it come down here close enough. I was in. It came a little bit against me, but then this market just took off. That's all I really want to share. Again, this is Solomon from RightSideTrading.com, where you can learn to trade on the right side with confidence. Have a great day trading. Talk to you tomorrow.